Studio Speak Ming Tabiriba Mapu Hanumaktada Ashapriya Taramnochere. Nasig episode sa da Quina Kana Jagatoriba say investment in mutual funds. Hibisigi Matangdane. Nasig episode sa Gidamag Hugi Studio da links in Biriba Guestasana, co-founder of Jet Funds, VIDHI TETUJA. Ms. VIDHI, welcome to today's episode about the investment in mutual funds. And first of all, I would like to thank you for taking your time out from your busy schedules and marking this spectacular evening with your glorious presence here. Thank you so much for coming.
Thank you for having me.
Thank you so much. And first, how will you introduce mutual funds to common people?
Okay. So it's actually a very simple concept. Imagine that you had to go from Imphal to Murray. Now, there is one very simple way. You can take your own car. If you know how to drive, you know the way, you can take your own car. You're an expert at driving, right? So you take your own car and you get there on your own. But there are also some people who want to get to Murray, but they don't know how to drive. What do these people do? Yeah, so they hire an expert driver who can take them, and that is exactly how mutual funds work. When you get an expert to manage your money, to take your money and basically put it in the stock market, that's mutual funds. When you take your own money and invest it in the stock market, that's like driving your own car.
Yeah.
So how mutual funds works is that it takes money from a lot of investors like you, me, maybe some of our viewers take 100,000 rupees, etc. from each and every one of them. They pool it together and then they invest it in the stock market. They are experts who manage this money, and they are responsible for taking your money from say A to B, which is like at a current rate, to giving a certain amount of returns to your mutual funds. So that's how mutual funds work. It's not necessary that mutual funds only invest in say the stock market. Some of the mutual funds also invest in the debt market.
What is debt market?
All right, debt market sounds like a very difficult word, but let me break it down for you very simply. So I'll give you an example. So for example, tomorrow you, ASHAPRIYA, start your own company. Yeah, you have your own company and you want to grow it from Imphal to say Meghalaya all the way to Calcutta. Now, what do you need for this? You need money. You need money, yeah. So you come to me or to a bank or to somebody, you tell me that, okay, if you give me 3 crores, I will give you 8% interest every year. Why don't you give me this money? Now, I will give you this money. This is a debt. So you owe me, which is a debt. So companies, big companies like this, even the government of India needs money in this form to grow for some projects. And these are the kind of instruments that a debt mutual fund invests in. So this is what mostly mutual funds are.
Okay, then how many types of mutual funds are there, and please kindly elaborate the different types between the mutual funds.
Sure. Before we go into the types of mutual funds, I'd like to cover one more thing. Mutual funds currently has about 38 lakh crores of money invested in themselves. Yeah, like so 38 lakh crores of Indians' money is invested. About 2.5 crore Indians invest in mutual funds. So it's a very big instrument. A lot of people invest in it. Over the last 3 years, the total number of people who invest in mutual funds has doubled. So because of so many people and because of the amount of investments that there are different types of mutual funds that people can invest in. So the first type is equity mutual fund that I talked of in the beginning, right? Equity mutual funds invest in the stock market or in shares. So for example, you've heard of some companies like Lakme, Head and Shoulders, etc. They are all from say Hindustan Unilever, yeah? So that is one type of share that you can invest in. Titan, yeah, like the watchmaking company, is a stock that you can invest in. Royal Enfield, the bullet bike, yeah. So these are all shares that you can invest in. That's called an equity market, yeah. So equity mutual funds invest in shares. The second type of mutual fund is the debt mutual fund, which I just explained. It invests in debt instruments. Debt instruments are usually less risky. They give lesser returns, but they're also less risky. So about 8 to 10%, you can, 5 to 6% you can expect in debt mutual funds. Can I say that again?
Yes.
All right, I'll just say this one more time. So debt mutual funds are less risky. You can expect about 5 to 6% return in debt mutual funds. Equity mutual funds are slightly higher risk. They invest in the stock market. So there you can expect about 10 to 12% return. Then there's a third type of mutual fund, which is a hybrid mutual fund. As the name suggests, it's a mixture of these two funds. So some part of your money is invested in the stock market and some part of your money is invested in the debt market. So a combination of it is called a hybrid mutual fund. They give somewhere about 8 to 10% return. So these are the primarily the three types of mutual funds.
Well, out of the three types, which one is the most secure one?
The most secure, the least risky mutual fund is the debt mutual fund. There is a rule in finance, the more the risk, the more the return, the less the risk, the less the return. So debt mutual funds are somewhere lower, they have low risk and low return. Hybrid mutual funds are somewhere in the middle, they have medium risk and medium return, and equity mutual funds have high risk and high returns.
And how would you vary the short-term and the long-term mutual funds and the difference between them?
Sure. So mutual funds really, or any kind of investment, really depends on what your goal is. So it's all dependent
and
on...
I think it depends on the people's thought or people's plan.
Absolutely. It all depends on your plans. For example, if, like I was saying, we have ASHAPRIYA company, right? You need money every day, like you have investments, you need to keep money somewhere, but you need money on a daily basis for expenses. So you can't really keep money for long term, which means that you have a short term goal. Yeah, you need money in the short period. So here we will recommend you different kind of mutual funds, maybe like a liquid mutual fund. Whereas if you have a long term view, say for example, you want to save money to buy a house later, or you want to save money for your child's education. These are long term investments, and here you will invest in long term mutual funds. An example of a long term mutual fund is an equity mutual fund, for example ICICI Blue Chip Fund. Yeah, that's meant for the long term. Over the past 10 years, I think it's given about between 10 to 12% return. So that's the kind of returns you can invest in the long term, and in the short term you can expect anywhere between 5 to 6%.
And for example, if I want to buy a big house in the next 5 years, and if I don't have any savings now, then how much do I need to save every month or every day and to reach that goal?
Okay.
If I'm asking that if I don't have savings and if I'm going to start savings from today, then how much do you think?
Okay, so let's take a goal that you want to buy a house worth say 50 lakhs in about say 10 years. Yeah. So in about 10 years time, you would have to invest 15,000 rupees monthly to be able to get to a house that's about 50 lakhs. In this much time period, you would have invested 25 lakhs and you would have made a return of about 25 lakhs. Yeah?
And how is it possible?
That's the power of compounding. What happens is every year you get 10-12% return. At 12% return, you just keep investing 15,000 rupees every month. At the end of the time period, you've invested 25 lakhs, and at the end, you also make a return of 25 lakhs. So that's the power of mutual funds. Net, you have your 50 lakhs and you can go ahead and buy your house.
It sounds great.
Yeah.
And then how will you distinguish the mutual funds from the fixed deposits?
Okay. So fixed deposits are a different type of savings. They give you assured returns. In fixed deposits, you cannot withdraw money. As you know, once you put the money in your fixed deposit, you can't withdraw it. If you want to withdraw it, there has to be a penalty to it, right? Yeah. Mutual funds is different in a lot of ways from fixed deposits. Number one, they give higher returns. Fixed deposits typically give you about 5%, 6%, maximum 6%. Yeah. Mutual funds, on the other hand, over a period of 5 to 10 years, will give you about 8 to 10% return. So, for example, in the terms of returns, we'll take a very small example. You invest some money in mutual funds. Yeah. You will earn on 1 lakh rupees over the next 5 years, you will make 1,76,000 rupees. Yeah? Yeah. And in the same thing in an FD, you will make about 1,36,000. And not only that, on top of that, you have to pay a 30% tax on the returns on fixed deposits. So that comes to about 1,25,000. Whereas in mutual funds, if you keep the money for more than 3 years, you don't have to pay any taxes if your returns are less than 1 lakh rupees. Here, like I said, you've just earned 75,000 rupees. So no taxation. So one place you earn like 1,25,000, one place you earn 1,75,000. So that's a 50,000 rupees difference at the end of 5 years. Yeah. So that's the number one difference. The second thing that I covered, there's a difference in tax rate. If you are earning, if you have a tax slab, fixed deposit returns are taxed as per that. Whereas in mutual funds, after 3 years, you don't have to pay any tax in equity mutual funds. Yeah.
Is it only in equity mutual funds?
Yes, in debt mutual funds you have to pay a 15% tax. Yeah. So in debt mutual funds you have to pay a tax. In equity mutual funds, if your return is less, your gain, net profit is less than 1 lakh rupees, you don't have to pay anything. Yeah. So that is an example of the second part that I said for taxation. You have to pay less tax in mutual funds. Number 3, there is no lock-in. Like you have to make sure that you don't take your money out from FD, otherwise there will be a penalty. There is no such thing in mutual funds. You can take your money out any day that you want. Put your money, take it back.
Is there any penalty for?
There is no penalty in mutual funds. There are some mutual funds that have a penalty for like a very small penalty called an exit load, which is 0.1% at times. It's very, very small. But most of the mutual funds don't have an exit load. If you put the money, you can take it out at any given point of time. Yeah.
Okay,
So these are the 3 major differences between fixed deposits and mutual funds.
Then, will you suggest that when it is the good time to invest in mutual funds?
There's no right time or wrong time to invest in mutual funds. You need to start immediately. Like the sooner that you start investing in mutual funds, the better it is for you. So how about I give you an example of early investing? Yeah, I'll just do a small calculation on my phone. Suppose if someone starts investing at the age of 40 years, yeah, and their retirement is at 60 years. So they have 20 years of investment left. So they invest 5,000 rupees per month. Then by the age of 60, they will have a corpus of 65 lakhs by investing only 12 lakhs. Yeah. But if someone starts investing at the age of 50, they got late, they didn't start investing.
It's only 10 years then.
Yeah, it's only 10 years. Then they will have a corpus of only 13 lakh rupees by investing 6 lakh rupees. So in one case, you make 65 lakh rupees, and in one case you make 13 lakh rupees. The sooner you start, the more money you have at the end of it. Yeah, so that's very important in mutual funds. The sooner you start, the better it is for you.
And lastly, I want you to talk about the Cherry Jet funds that you launched today in Manipur.
Yeah, okay. That's a very exciting thing that we are launching for the people of Manipur. I want to start by setting the agenda of like why we have started this, why we've launched this product. There are about 10,000 crores invested or kept in bank accounts across Manipur. Every year, the people of Manipur lose 200 crores on it. Yeah, 200
That's
crores is the amount that we lose every year from Manipur. Why does this happen? It's for a very simple reason. You keep your money in the bank. How much interest does your bank give you? Do you have any idea? No idea, right? Most people don't even think about it. The bank gives you about 3% return every year. Whereas the same bank takes your money and gives it out as a loan, maybe to some businesses or to some people in Bangalore, Delhi, etc. And from them, they charge about 6 to 8%. Yeah? Imagine that you could cut out this middleman. You could directly earn what your bank is earning. So in this daily investment account, we are hoping to give you 2% extra than your current bank account. Yeah. So every year we want to make sure that by the end of this year, we are saving about 200 crores for the people of Manipur. That's our goal, and that's how we've launched this. So, that's what it is. I'll tell you about some very key features about this account. Like I said, the first point, it gives you almost 2% extra over your bank account. Secondly, it comes with a free HDFC debit card. So everybody who invests in it gets a free HDFC debit card. You have free unlimited ATM withdrawals. Most of your cards, after 3-4 withdrawals, they will start charging you money.
It's only up to 25,000, I think.
Up to 50,000.
Is it 50?
Yeah, up to 50. In this account, yes, it's up to 50,000.
Okay.
Yeah, so you get unlimited ATM withdrawals. You can start with as low as 100 rupees. You can open the account with just 100 rupees. There's no minimum balance required. So like your bank must call you, it's like, no, you have to keep 10,000 rupees in your bank account. No such thing, yeah? So it's no minimum balance required. And if you want, you can auto top up from your bank account every month. So automatically, you set a limit of 500 rupees every month, it will keep going into this bank account. So these are the key features of this bank account. We've launched this with the Z Funds app. It's available on the Play Store. and it's available on the Apple Store. It's the blue logo, blue ZF logo is the app. It takes literally 2 minutes to open this account. It's all paperless. You don't have to visit a branch. You don't have to do any kind of paperwork. It's all online. And within 2 days, your bank account is open and you can withdraw the money anytime. So up to 50% of the money you can withdraw anytime. It will reach your account within 1 minute. If you want more than that, it takes 2 days and it will be back in your bank account. So it's a very clean process. You don't have to go fill out a form. It's all on your app. You just press one button and it comes back to your bank account. It's that simple. Yeah. We've launched this in partnership with the people of Manipur, that is Cherry. It's owned by the people of Manipur. We are in partnership here. There are already 200 retailers across Imphal and Manipur who are full service accounts. So if you have a problem with their Z Funds account, you want to go and talk to somebody, there are 200 retailers already there. So it's not, like some online scam where there are people actually available here. You can go and talk to, you can speak to them. There's a very common question that people ask me. I don't know if I should be answering it, but they ask me what happens if Z Funds closes? What happens if Cherry closes? Yeah, I have put my money, but what happens to my money if Z Funds closes? It's a valid question, right? Like, why should they trust me? So here I tell them that you don't have to trust me because your money is not invested in Z Funds. In fact, the money does not come to Z Funds bank account even for a minute. It directly goes from your bank account to Nippon India Liquid Fund. It's one of India's biggest mutual fund companies. They currently manage about 21,000 crores just in this mutual fund. It has a track record of 18 years, so it's a very reliable mutual fund. Some of the biggest businessmen and corporates invest in this account. They use it instead of their bank account because they're smart and they don't pay the bank accounts. So, your money just directly goes there. And so at any given point of time, if Z Funds doesn't exist or Cherry doesn't exist, you can just log on to the Nippon website and you will have all your investments there. So your money is 100% secure. I heard a lot, while just on my way from the Imphal airport to here, I saw at least 3 boards that said 10% return in 1 month, XYZ investment, and I was like, I can't give that. Like, this is very, very high returns. How is this happening? Then I spoke to the people of Tom. I spoke to some more people, and I realized that it's for a very short time. During pandemic times, the people of Manipur have lost hundreds of crores in such schemes because they work like this. For example, you, me, maybe 2-3 people here as cameramen, you put money in this fund. Yeah. Then from your money, they will pay me. From my money, they will pay them. So it will just keep happening as long as we keep putting money. But the day the money stops coming in, nobody will have any money. So it's a scheme that doesn't pay off in the long term. Whereas with mutual funds, it's regulated by the government of India. They necessarily have to put their money in good companies. They need to make sure that they follow some guidelines. And honestly, mutual funds have been around for the last 30 years. No mutual fund has ever given a negative return for 5 years. So if you kept your money for 5 years, nobody has ever made a negative return. And this fund that I was telling you about, the Nippon India Liquid Fund, which is better than the savings account, that has not given a negative return for even 2 days. It has always given a positive return. So it just makes sense. It's a smart decision to be kind of investing your money in all of these funds. Yeah?
I think then it's good to invest in mutual funds then.
Of course it is. It's a very smart decision. See, that's what I was telling you. In places like Delhi, Bangalore, etc., most of the people take mutual funds as their primary mode of investment. The number of people who are investing is growing. Now we have brought this to the people of Manipur. They also need to start taking this option seriously because in the long term, this is where they will make money. All these small schemes, you'll make money, but you lose money. It's not the best idea.
It's always happening in Manipur. That's why people are so insecure about all this kind of schemes.
Which is why we thought it's very important to launch such a product here because this is regulated by SEBI. You cannot lose money here. Like it is possible that the markets go down and your funds go down for a while, but in the long term, for over 5 years, you always make money. So, at least the risks are known and your money never becomes zero. Yeah, it can go down, it can come up, but it doesn't become zero like these chit funds. So actually, to counter this, we have another product on the Z Funds app. It's called the daily investment account. What you can do is you can start from 100 rupees every day. Simple.
That's very small amount.
Yeah, that's all you have to do. 100 rupees every day. And the past 5 years, even 3 years, that mutual fund has given 12% return. Yeah.
And before heading on to the next question, let's take a small break.
Yeah.
Viewers, may amdi kete na break matang losari. Break matung da viewers may amum ka nataram nokchari, and let's continue again. Will you please tell us about the ways to invest in mutual funds?
Sure. So there are primarily two ways to invest in mutual fund. One is a monthly SIP, in which like a recurring deposit, you invest a certain amount on a monthly basis. So every month a small amount goes from your bank account. The second way to invest in mutual funds is a lump sum, that is one-time amount. So say for example that you've been saving some money, you have a lakh, 2 lakh rupees, you invest it in one go. That is a lump sum amount. And if you want to say save small amounts every month, 1,000, 2,000, 5,000 rupees, that is a SIP. So these are the two ways. Often people ask us, what is the better way to invest? Is SIP better or is lump sum better? So in the long term, SIP is always better. That is, when you invest small amounts monthly, it's always better. Because what happens is you invest when the market is high and you invest when the market is low. Let me explain it to you with an example,
Yeah.
okay? So for example, mutual funds, whenever you invest in them, you basically buy some units. What is a unit? Unit is what you get in return when you invest in mutual funds. So say for example, if you invest in stocks, you pay 1,000 rupees and you get say 5-6 stocks shares in return, right?
Yeah.
So similarly, when you invest in mutual funds, you get units in return. Now when the market is high, that is, it is going good, these units become expensive. Yeah, that is that if you pay 100 rupees, the cost of one unit is say 30 rupees. So you only get 3 units. When the market comes down, the cost of these units falls. That is, each unit will be available to you at say 10 rupees. Then you get 10 units if you invest 100 rupees. So over here, like at one point you got a higher value unit, here you got a lower value unit. Over the course of say 5-6 years, this becomes normalized and you get a slightly higher return when you invest through SIPs than you invest through one-time amount. So if you want to invest for a long-term goal, we always suggest people to go with the monthly SIP amount.
Okay then, and how will you choose an investor to select a good place to invest, or how would that investor know that place where you want to invest?
Yeah.
And
So
what are the securities for that?
that's actually a very good question. We've talked so much about mutual funds, we've talked so much about why they are good, but how would you choose? How will you know which mutual fund is good for you or which platform is good for you? So Z Funds actually has a team of dedicated experts to help you choose which mutual fund you should be investing in. You can also invest through maybe your bank. You can directly go to the website of any of the mutual funds and you can invest. That is if you have knowledge of mutual funds. For Manipur, we've specially launched a Manipuri call center also. If you have questions, if you want to understand, see, a good financial advisor will always ask you, why do you want to invest in mutual funds? What is your plan? Yeah, and then they will recommend you mutual funds. So Z Funds actually works on this principle only, that every investor should have a dedicated expert who can talk to them, who can explain to them what is the best mutual fund that they should invest in, when should they invest in it, when should they get out of it. All of that is taken care by a expert at Z Funds. So when you download the app and you fill in your name, number, there'll be someone from our side who will get in touch with you, who will call you. If you prefer Manipuri, somebody will talk to you in Manipuri. If you prefer English, somebody will talk to you in English.
Is it available in every language or what?
No, we've launched this especially in Manipuri only here. Right now it's available in Hindi, English, Bangla and Punjabi. Right now for Manipur, we've also launched Manipuri.
Okay,
Yeah.
then I think it will be easier for people of
Yes,
Manipur.
because it should not be, language should not be a barrier in investing or to get the right product for you. I mean, it's not like, if you know Hindi, only then you should get the right product. Or if you know English, only then you should get the right product. You should get the right product no matter where you're from, what language you speak, you should get the right product. I mean, we were just speaking before the break, right? Like that so much money is lost in schemes like chit funds, schemes over here. It's just because there is not enough awareness.
Now, are there any expert to whom an investor can seek guidance
regarding
like this mutual funds?
Yes, absolutely. Like I said, on the Z Funds app, there is an expert available for every single investor. Not only that, across Manipur, we have 200 retailers who are trained. Like I told you, they are trained, they can help you decide which mutual fund you should be investing in. Our research team in Gurgaon, in Delhi, has about 8 people who sits down and who analyze every single mutual fund. They see what is the best mutual fund, what is not a good mutual fund to recommend right now, and basis that research, they will give recommendations to these retailers who will then be distributing it to the people of Manipur. So at all times, we ensure that only the best product is given to all the investors.
And the last question, since the financial literacy rate of Manipur is relatively low, then what would be your general advice to improve these current situations?
Honestly, I will suggest that the people of Manipur not invest in schemes that seem unrealistic. Yeah,
it's really true.
Yeah, I mean, you know, it's very lucrative. It sounds very good in the short term. Honestly, if somebody came up to me and told me that they would give me 120% return, like they would double my money in 1 year, my first question to them would be how. The first question to increase literacy is to ask how. Anybody explaining you any scheme, just explain, okay, you're giving me the returns, just tell me how are you making these returns. Other than that, I would suggest that if you don't have the knowledge of finance, of banking, of investments, it's always better to talk to somebody. Check that they are certified. The Government of India gives you a certificate. If you want to be an investment advisor, you have to actually study, give a test and get a certificate. Check that this person has the certificate, talk to them and then make your investments. Don't, invest just because your neighbor has invested or just because XYZ has invested and they made money. They made money doesn't mean necessarily that you will make money. It's always better to talk to an expert, talk to somebody who knows about it. I mean, what could be safer than a place where 3 crore Indians are investing? I mean, there's safety in that kind of numbers. The government regulates this. So there's some sort of safety here. But still, I would not recommend that you go ahead and choose your own mutual funds. It's good. It's free, right? Like, why don't you talk to somebody? They might give you a good recommendation.
And thank you, Ms. VIDHI TETUJA, for coming to our studio and sharing some special knowledge about mutual investment. Ngasi gawin na matang sa episode investment in mutual funds losinjare. Mayang tabi ba mayang puno magpo mo kana krumjare.